Destination Africa, brought to you by Standard Bank.
Hello and welcome to Destination Africa with me, Alicia Second. When it comes to the construction industry in Africa's major economic hub, South Africa, it's been labelled depressed, but with early signs of a slow recovery in the local market. According to construction firm Murray & Roberts, the medium-term outlook seems to be positive given the major and growing infrastructural backlog in the country. Nevertheless, it's the opportunity across South African borders that's boasting more of the appeal right now, and it's something that many foreign investors are paying more acute attention to as well. Today on Destination Africa, we'll be taking a closer look at both the pros and cons of investing in infrastructure on the African continent and what it takes to leverage off the opportunity. Joining me in studio for the discussion is independent consultant Andrew Maggs, while Surendra Bhatia, Deputy MD of Athi River Mining, joins us from our studios in Nairobi, Kenya as well. Welcome to you both. And Andrew, perhaps let's start off with you here at the desk and start off with a broad overview of the construction sector in Africa. I mean, you joined us a while back when we put infrastructure and the need to build Africa in the spotlight. What's your sense of the construction sector on the continent right now?
Well, Alicia, first of all, I'd agree with your opening remarks. If you look at the construction sector in South Africa, the major players, the listed companies, I think without exception, they've all been under stress. And going forward, I think this year is going to be exceedingly challenging. Finding opportunities here, but then also looking cross-border. Now, for those companies, the opportunities, many of the opportunities lie in building infrastructure. And if you look at the infrastructure requirements across Africa, it's estimated about $93 billion required per year for the next 10 years going forward. Now, current levels, spending is around about 45 billion. Efficiency gains could amount to around about 17 billion. So you're looking at a shortfall of, help me out, what's that, 31 billion. Okay, and it's a little bit like being on a treadmill. You know, the faster the pace, the more difficult it is to stay on. What I'm saying is that the greater the infrastructure requirement is in Africa, the bigger or more difficult that challenge becomes. Absolutely.
Well, it's certainly presented enough investment opportunity. But Surendra, before we get into that opportunity and some of the challenges that perhaps comes with it, let's get your view on the East African market specifically, because you're a player that's extending your footprint within that East African region.
Well, what we feel is that over the next 10 years, there would be a significant growth in the infrastructure segment, not only in Kenya, but across the entire East African and the Sub-Saharan African region. Just for example, in Kenya, at the present moment, less than 8% of our population in the rural areas is connected to power. Now, power is a significant requirement for the social development of the country. It is for increasing the literacy rate that we need power. It is for increasing the productivity we need power. And going forward, there are significant investments being made in the power sector by Kenya, as well as in Tanzania and Uganda. So our feel is that over the next 10 years, the infrastructure segment in Kenya should see a double-digit growth.
Okay, so that enticing in terms of the investment appeal that's being put on the table, Andrew. Because of that identified opportunity, though, across South Africa's borders, overcapacity and then margin pressure are two challenges that investors within this space face, many saying that it's a trend that's likely to persist as we move into 2012 for the construction industry. So to what extent does that act as a deterrent to investing in this space, despite the opportunity?
Well, I agree with that. I think you know, going forward, you know, margins are going to be thin, but I think a lot of the South African companies are going to be impelled to seek cross-border border work out of necessity. You know, with order books depressed in this country, to satisfy shareholders, to keep people on the payroll, you've got to keep you've got to find contracts, and if that means going into Africa where the competition is stiff, make no mistake about that, and competing at thinner margins, that's something that I think will have to take place.
And in essence, it's about getting your foot in the door. I mean, Group 5 here in South Africa, one of the companies that says that it's going to be less reliant on the South African economy moving forward, expanding its geographic footprint to at least 40% of revenue outside of South Africa. We've got that country, Surendra, currently in 24 countries with 34% of their construction order book over border. What's your assessment of the competitive landscape?
Well, I think, there are certain advantages which a company like Group 5 would have when they come into a country like Kenya. I mean, their size, their technology, their resource base, their equipment base, their experience in building infrastructure would certainly add efficiencies to our market. At the same time, there are local players who have significant advantages like access to the raw materials, to the construction materials, to the manpower which is required to execute such projects. Now, both sides have advantages, and we could probably build on the advantages which both the sides have to build an efficient infrastructure over East Africa.
Mm-hmm. Well, it's certainly a case of survival of the fittest. I mean, those with strong balance sheets, cash flow as well, Andrew. Looking at investment models, it's interesting to see how some of these private companies are opting to do business on the continent, though. I mean, despite the kind of opportunity that government spend, opens up when it comes to infrastructure development, they're opting to go down that route of investing primarily in the private space. And that's because in many instances, there are no guarantees that payment will be made for work done where fingers have been burnt before. Is that justified?
Alicia, fair comment. Now look at the patterns within our clientele, which comprises major construction companies, some of the big consulting engineers, and there certainly is a preference to pursue private work. Although looking forward, you've got to ask yourself, well, funding for private projects, whether it pertains to mining, oil and gas, whatever the case might be, is that pipeline sustainable? I've always seen it really as two pools or streams of opportunity: the private sector projects, but then also the public sector work. And I understand, you've just referred to it now, that there sometimes is a reticence to pursue opportunities in that sector. But it can't be ignored. If you look at most of the infrastructure spend on this continent, it comes from government, and providing funding to those governments are the multilateral institutions such as the World Bank, the African Development Bank. And if you look at their spending patterns over the last couple of years, instead of decreasing spend into Africa, it's actually increased. Now, I've got no reason to believe that trend won't continue. And if you look at the spread of their projects, I mean, it's across all sectors. If I can just touch on something which Surendra spoke a little bit earlier when he mentioned the power sector. If there's got to be one standalone sector that requires investment on this continent, it has to be power, and specifically generation, and thereafter obviously installing the transmission infrastructure that goes with it. And to sort of come back to what your question, if you're looking at public and private, I would say in the public space, certainly the power sector has got to be on your agenda.
And you've got companies that have got to weigh up that opportunity cost moving forward. I mean, we've got the Zambian government, just one of those that are committed to infrastructure growth on the continent. PPPs as an infrastructure model, I mean, is that something that needs to be explored possibly a little bit more aggressively?
I think it does, yeah. And I think going forward we're going to see more private sector involvement in large infrastructure projects, whether that pertains to construction of ports, again coming back to the power sector, large power projects, particularly hydropower, and I'm thinking of East Africa. In prospect there are a couple of large, in Tanzania, large hydro projects that we're tracking closely. For example, the construction of I think it's a 358 megawatt generation facility on the Ruhiji River. In prospect there's the Singida wind power project in Tanzania, and those will likely be implemented by way of PPP.
Surendra, let's touch on your experiences. I mean, do you have any related to dealing with government? How do you mitigate against risk where you know that there's opportunity that comes hand in hand with that risk, where, as we've been talking about, government has infrastructure projects across the African continent high up on the agenda?
And there have been different models which we have been discussing with our government. For example, in the power sector, as well as in the infrastructure sector, the superhighway sectors, construction. We could look at models like BOLT, which is build, own, lease and transfer, or we could do BOT, which is build, operate and transfer with the government, which is done over a period of time so that the revenue flow to the company is controlled, thereby negating the risk of having to depend on the government to fund the revenue side of the project. Now, in terms of the fund availability for companies like us or in joint venture with other major infrastructural developers, we can raise international funding to fund the infrastructure projects. The only thing which we need to do is to eliminate the risk of the revenue not coming in.
Yeah, that's absolutely it. And talking about negating risk, and it's certainly not for the faint-hearted. And so we've got things like mining activity and expansion there, for example, offering these construction players some respite. Just how imperative has diversification become when it comes to, just who one does business with?
Alicia, I think, again, I refer to our clientele, and I think a few years ago the temptation was to, I hate that expression, shotgun approach, but put in bids, left, right, and centre. I think those days are long gone. The obvious constraint, it costs a lot of money to prepare bids, so you've got to make darn sure that you're going in there with a fighting chance. But I think clients have become a lot more discerning. They are more thorough in assessing risk and passing risk through sophisticated risk matrix models, so that when bid decisions are made, hopefully there's more upside than downside.
Surendra, certainly construction companies in 2012 are going to be tested on how robust their operations and strategies are moving forward, and plans for growth in the sector to a large extent have to incorporate those offshore ventures, particularly on the rest of the continent. Take us through some of the challenges you've experienced expanding beyond borders.
I think one of the greatest challenges which we have experienced is being able to adapt to the local environment. Now, there are opportunities all across Africa. There are differences in which every country works with. And the key for us has been to be able to communicate the similarities and the strengths, respect the differences, and work towards completing the project in every country as per the local environment. Now, going forward, I think that will be the challenge for every other company. It is important for every company which is going across its borders to understand the working culture and the working environment in different markets.
And so it becomes all about reacting and adapting strategies and assessment of capabilities and integrated delivery models as well. We'll be delving further into issues around investing within the infrastructure space on the African continent straight after this short break. So don't go away.